Hey folks, welcome back to Crypto Cash. Thank you for joining me here today. We're taking another look at BakeryToken. This is an interesting one, just the way the price action has been moving. We're going to only look at the technical data here today. There are no fundamentals here. If you'd like the fundamentals, I will obviously cover this likely at a later date so we can do a deeper in-depth dive into BakeryToken. It's hard to say. Anyways, I'm not a financial advisor. Please do your own research. Thank you very much for watching, and just bear in mind this is for educational purposes only. If you'd like to contact me on Telegram or Twitter, the links are in the description below. We have a fantastic Telegram community, so please jump on in if you'd like to learn more. Furthermore, there is $25 worth in unclaimed Bitcoin from Voyager if you'd like to download the app and install that and consider moving forward with them. It's a really good service. Either way, let's go ahead and take a look. Alright folks, let's take another look at Bake. I am interested to see what happened here. There was a massive sell-off, and we'll take a look on how to effectively prepare for this current climate. Let's go. Alright, so Bake, here we are, 15-minute chart. So, just a quick note before we look at Bitcoin. There was I think we were in this range here yesterday. We were looking at this last night, and it looks like it came up and hit resistance level approximately $6 and just say 10 cents twice, and a massive retracement, and then it's kind of figuring itself out. Pretty normal. That sounds about right. You know, again, what goes up must come down. I'm a firm believer in that. So let's go ahead and take a look at Bitcoin, quickly compare the two and see if there's any correlation, and then jump onto the one-day chart and work our way down. First thing first, let's see, just to see the date here, that was at 245, 429. Okay. All right, so looking at Bitcoin here, just to quickly note before we go any further here with Bitcoin, cool thing about it is it's back above support. So we lost support at 53,300, and it was under there for approximately 8 hours, 6 to 8 hours, and it came back up. And what's nice, we see the moving average of the 50-day moving average. It's been tested 3 times, and then a 4th and a 5th time. So it worked as a very strong support level. And what's nice is the support level here with the 50-day moving average and the 53,300. Those are both kind of working in tandem. So it's great that that worked that way. What I expect moving forward is for the 100-day moving average to be tested likely in the next 24 to 48 hours. I'll be excited to see what happens there. It should break through. Again, we never truly know, but I feel like this is the time where Bitcoin is going to start ramping up to get back to its all-time high. We'll get there eventually. For now, that is essentially what we're looking at for Bitcoin. And let's go ahead and go right on back to Bake. So let's start with the one-day chart and work our way down. Now we're familiar with this. We looked at this recently. Strong ramp up, a long period of consolidation there. It attempted to increase here, but this was right around the peak of Bitcoin. It started to sell off, and the price essentially mimicked that on Bake. But it did ramp up 3 days in a row, so we had 3 extremely strong, long green bar days of what? That's somewhere in the range of 20-30% growth day after day. So it's no surprise that we see the price come down right now. I'm happy to see this because it basically just means that we can buy in at a lower cost and average down depending on when you bought in. Of course, you could average up too if you got in early, but it's really up to you. So just to quickly note on the one-day chart, we've got an RSI that's overextended, close to 85. No surprise, it's coming back down into a reasonable price range of hopefully under 70. So I would expect with traditional price market movement in crypto, when the prices go up this fast, we should expect to see at least 2 or 3 red days. As far as red bars closing 3 days in a row, that's pretty common. At least 2 days, I would say, likely 3. So I wouldn't be surprised if the price continues to sell off. It may not go much lower. We'll look at the support and resistance levels, but there's a good chance that it's going to continue on this bearish trend, if you will. But currently it does show bullish momentum here, but it's overextended. We'll see that likely change over the next few days. Again, the RSI is close to 70, trending towards 70. Let's look at the 4-hour chart next. Almost the same thing, only a little less severe. RSI is down in 57 range, so honestly, not a bad consideration for an indicator of a buy signal. But I can tell you that we still want to wait because the price action, the way it's looking right now, price is under VWAP, at least presently on the 4-hour chart, not a lot of validity there, but it's losing significant momentum. And as you can see, this line here, the top line's about to cross and intersect in a downward fashion. That is a telltale sign for a momentum shift. So we should see some type of shift in momentum, as we have already seen so far, but it should continue. It might even just jump right past that point. A lot of times when we see those two lines intersect in a downward fashion, it can effectively create a significant push, if that makes sense. Plus, with the price still being overextended from where it came from, I mean, shoot, let's see what that percent is. So it started right around 143, and even right now, it's up 227%. And it was about, 320% at its high, almost 330. So that is interesting. No surprise that it continues to come back down. So hopefully you've taken your profits and you were able to trim some off the top. And I'll show you in the 15-minute chart what I mean by that and what would be a good approach next time when you see something like this happen again. Let's go ahead and look at that. Oh, one last thing too, I forgot to mention the moving averages. Irrelevant at this point on the 4-hour chart. I typically find them to be the most favorable, the 50, 100, and 200-day moving average on the 4-hour chart, but they're not going to be tested for a while, so just bear in mind those are null and void. But pay attention to how the 50-day moving average reacts to the price action if it comes down over the next 48 to 72 hours. It may happen soon, depending on the sell-off. All right, so 15-minute chart. Taking a look here, let's zoom out a little bit. Just to quickly note on this little this downward momentum, you can see the RSI, it's hovering in the lower quadrant. So we are right around 34. Again, not a big deal on the 15-minute chart. It really only helps us when we see, if it's super low, then there's a chance it might come back up. So if this comes down to just say, in the 20s, then we might see that as an opportunity for a buy signal to come back up. But that's just, in itself, that's what that means. We want to look at all the other indicators first to identify, they all need to be working together, right? So don't just make your decision on that, but that is a good sign as a potential entry point, according to the 15-minute chart. Another good sign too, and again, this isn't a lot of validity, the 200-day moving average is holding, but again, I don't put a lot of faith in that because the lower the time frame, you want to have lower moving averages, if that makes sense. So usually you say 10 or 20 would be ideal in this circumstance. I try not to use the 50, 100, or 200 in this situation, so a lot of times I'll just go ahead and make them invisible and focus only on the volume weighted average price, the VWAP. That said, price is under VWAP right now, so until it tests and holds above for no less than 30 minutes, 2 15-minute green bars, I would recommend not taking entry. Furthermore, we want to look at the 1-minute chart to see kind of what's going on with the price action there. We might even want to consider a retracement tool in this scenario, just kind of identify how this retracement is treating us, right? So we'll go from the top down to see what that looks like. MACD, honestly, doesn't matter too much on the 15-minute chart. Really only use the MACD on the 4-hour chart. Personally, that's my favorite. It does tell you a little bit about the momentum, and we are still in bearish territory, but honestly, that doesn't matter. It's pretty obvious we're in bearish territory here, considering on the price, how it's just declining. So let's go ahead and mark our support and resistance levels before we move on. Let's go ahead and find them here. So, obvious resistance at approximately $6.10. So mark this here for later. Next up, let's take a look at, that might be a good one. This is tested 1, 2, 3, 4. We've got another potential resistance level. Yep. Right about $5.08. So the price has a lot of work if it wants to come back and recover up above this. I still feel like it's going to continue to trend downward, but we'll see what the retracement tool looks like here in a moment. And yep, there's one more. So we do got a support level right in the range of $3.78, because it was tested 1, 2, 3, almost 4 times there, and then once as a support. So if we were to see some price movement coming down, pay attention to how this support level at $3.78 responds to the price action. So yeah, that's interesting there. We'd be reaching if we added any other support levels. So why don't we go ahead and move our way down to the 1 minute chart and kind of look at that, and then we'll see what a good entry point might look like for you. So 1 minute chart, we got the 1 minute here. And so you can see lower lows, consistent lower lows. When we take a quick look here at the retracement tool, and how to use this effectively is you first of all select Fibonacci Retracement. So on TradeView it's considered Fib Retracement, and you go from the very highest point, because this is a retracement level right here. So when that retracement started, that's where we go. It's basically the highest point in the recent price action. We come down to the lowest point. As you can kind of see, this is what the industry standards use. So a lot of times, if you see these resistance and support levels, these channels that it's created, they'll basically move the market based on these numbers. So I always recommend using, just going a little bit below or above these lines when you're going to plan to take entry. So again, in this situation, say you were shorting and you were trying to short, and just say you were considering taking a short line here when the VWAP was rejected. So you enter in the market now, and the best time to get out would be just above this line here, because in case it retraces and comes back up, then you wouldn't be out that profit. You'd be able to take a little bit of a win there. And see, that wouldn't be all that bad, right? That's almost 3%, 3.5%. Again, you want to play it safe, so probably right around to say 3%. So you'd shoot for a profit margin in that range there. And honestly, if you can get in and out at 3% per day, that's awesome. That'd be great. But again, that's kind of the general concept there, because again, these the industry leaders use this type of tool pretty consistently, so you can see why things are in this channel the way they are. So again, the key is to be less greedy than they are. So if you get in before or after they plan to get in or out, you're going to be a lot better off. So just something to consider. Now, as far as taking entry in this climate here, I would honestly wait for the support level that we looked at on the 15-minute chart first. So just taking a closer look here. All right, let's go ahead and move this up. We want for the price to come down to $3.78 first before we consider taking entry. And what I mean by that is see how it reacts to the support level. If it bounces off and holds for just say 2 15-minute green bars, then that would be a good thing, right? And in case you're new to the channel and you haven't watched my reviews yet, you'll learn quickly that I'm a firm believer on confirmation and making sure that we wait for support and resistance levels to receive confirmation before you take entry. And when you take entry, you don't take a full entry, you only take a percent. In other words, 20 to 25% entry at most. Okay? And the reason why I say that is because say you come in here and the price comes down, it bounces off here, and you get your confirmation, you get 2 15-minute green bars. In other words, 2 green candlesticks close above the support level. You take entry. Say you take 100% entry, you go your whole full position, and it loses that support, and it drops down to become a resistance, and it stays below. Staying in would be a bad idea. You'd want to take your loss and get out. But say, for example, you had got in at only 25% instead of 100%. Yes, you take a loss, but you minimize your loss significantly by only losing a little bit instead of a lot. See, I've learned this over the years that it's important to protect your investment. And if you're getting gains every day, just say you took that 3% earlier and you decide to get in here, down here as well, and you lost 2%, you're still good for the day. Get out, call it a day, start over tomorrow. That's how I've always tried to focus on it. If I gain 1% per day and I start with a $5,000 balance, like you're literally at like $187,000 and some change after a full year if you just gain 1% per day. So compounding interest is a fascinating, awesome, eighth wonder of the world. So I can tell you that it's worthwhile being careful and not jumping all in. Okay. So that's my little rant for the day. Please be careful. Please be safe. That's the whole point of me wanting to make these videos too, is to ensure that you don't lose your shirt, right? I've lost my shirt a few times and I won't do it again. That's why I want to teach you and help you understand the best way to go. So please just learn from my mistakes and don't do what I just said as an example. Don't go all in. That's another thing you'll hear too much consistently from me. I'm a broken record, I'm sorry, but unless you're hodling and holding on for dear life and you know for a fact that Bake is your end-all be-all and you're never going to invest in anything ever again, then go ahead and go all in. Doesn't really matter when you enter in, honestly, in the big picture, because if the price goes where you want it, you'll be making a lot of money. But if you want to get a little bit here and there between now and then and just keep adding to your profile and adding to your wallet, so to speak, then you're going to be in much better shape having considered that. So I think that's all I have for you here today. Really just be cautious. It's normal for this type of retracement after a significant increase that we saw, over 200% increase in a matter of 3 days. We're lucky to have gotten to this point. So, that brings me to my last thing, the very last thing here. So when you see the price action the way it is right here, so let's just go with an example right here. In this situation right there where the price was as high as it has ever been, and you see the RSI on the 15-minute chart being overextended, highly recommend you consider taking a 10 to 20% sell-off and you sell 10 to 25% of your position, because when you do that, you're ensuring that you are going to be more profitable, for one, because you take that money and you put into something else. Like for me, it's USD, and I just leave it in USD coin. And if I decide I want to reinvest and I get the indication that the price is going to come back up, say it bounces off this support level of, what was it, $3.76, 78 cents, $3.78. Say it bounces off that and I get my confirmation, I would take those earnings that I had earned and put it back in turn averaging down my price, my overall price, but significantly increasing my my benefit when the price goes back up, right? So you can do that. That's a pretty common practice, something that's advantageous to consider, because this time of year we want to kind of be taking our winnings, taking our profits whenever possible, because when Bitcoin reverses and goes south on us, as we experienced on the 17th, only it does that at a much larger, faster fashion, because it will happen. It's a 4-year cycle. It's going to happen. You got to be prepared and ready for that. So get ready to sell all your coin at a specific time, but leading into that, trim as much as you can off the top. Save that, put that aside, and leave that alone, or put it into Ethereum right now while everyone's jumping ship from Bitcoin. Or put it into Bitcoin because it's going to go back up again soon. There's a lot of different things you can do, of course, but please just do your research. And obviously, if you do like and consider subscribing, it would be very helpful. So thank you in future reference if you have done that already. Thank you to my loyal companions that have been with me through all these videos. So thank you so much. Got some pretty loyal followers. And let's just go ahead and continue to grow and learn and benefit from each other, right? Be sure to join the Telegram community. It's really awesome people in there. And we'll go and see you in the next video. Thanks so much for your time. Later.